Hey everybody, it's Greg coming to you with another Fundrise video. Today we're going to be going over a new acquisition that Fundrise made for the Interval Fund. It's a rental home community near Phoenix, Arizona. Before we get started though, if you like what you see, please make sure to hit that like button. It really helps my videos get up there with the YouTube algorithm. And by the end of this, if you do enjoy this, please make sure to hit that subscribe button and the little bell to make sure that you get the notifications that I make a new video and put it up on YouTube. Really helps. And without further ado, we're just going to get into this and look at this new acquisition that Fundrise made. So they put in about $1.3 million for 5 new homes so far here in Phoenix, I think Maricopa, Arizona. You can kind of just see these pictures here with the layouts and the interior colors and designs that they have in here so far, just on the beginning here. But yeah, they went $1.3 million to acquire 5 brand new houses, single family homes in the Tortosa community in Maricopa, Arizona, with plans to acquire a total of 70 rental homes in the community over roughly the next year and a half. Maricopa is a part of the greater Phoenix metro area, about an hour south of downtown. So at a strategic level, this investment goes with their Sunbelt apartment rental housing thesis. If you guys have seen my other videos, which I do suggest you go back and look, especially if you're in the Interval Fund, you can see the different properties that are in there. I think we're up to now 33. I think this will make 33. You can kind of see what they've been building with that Interval Fund to kind of go with that. A lot of it has been these single-family homes that they buy to lease as rentals in communities, so that they have a big community of a lot of rental income and a lot of apartments. But in this case, we're going to be looking at about 70 rental homes that they're going to be leasing up throughout the next year or so. And that's about what their MO has been with these communities. They've been looking at a lot of big communities, just being able to get that property and lease them out. And what they do, which we'll get into a little bit here, is they end up buying like 5 or 10 at a time in a community, just depending on how fast the company can build them, and then they lease as they're built instead of just waiting for all of them to be done at one time and then buy them. So they're kind of just putting some money aside each month and just building that up and buying the properties and leasing them out as they can, so that you as a shareholder in these properties can then get those dividends on a monthly basis and then just kind of build up from there as you're going. So it's kind of like a slow and steady instead of just really slow and getting a huge heap once it's all done. And they just figure this is a lot better because now you're getting your equity back sooner rather than later. So yeah, they're part of the Sunbelt, which is that whole southern area. Millennials, retirees, they're just seeing a lot of people moving from the north down to the south, especially in this past decade. It's just being, huge demand for warmer weather, things like that, for well-priced real estate too, because it's a little cheaper to live in the south in some of these areas where they're buying up property than it is in big metro areas themselves. So they do believe that it's a long-term trend. Just the pandemic has really accelerated this kind of movement, especially with people that are working from home. They don't have to go into the city to work. They don't have to commute, things like that. A lot of people, it's just more comfortable for them to work from home now. And these single-family homes that are kind of just spread out give them that offering to just do what they want, work where they want, things like that. So they did make this joint venture between 2 different funds, which one being the Interval Fund that we're a part of here. If you're starting with me in this journey, you guys know that the Interval Fund, this is, they're putting a lot of money into these different properties. This time they went $1.89 million into it from the Interval Fund, and the Growth E-REIT 7 invested about $210,000. So they're just doing a little small thing here with the different E-REITs. But the Interval Fund is putting in the bulk of this, so we're going to be getting the bulk of the return. Strategy, they're putting this in the value add, which you can see it's a little bit higher risk and return. It's step number 3 of 4. So moderate to high risk return profile. They're looking at several months to a year to be expected for that timing for delay of returns. Again, they're just building these properties and they just bought 5 of them. So they're in that first segment of 70 buildings coming from that. They're seeing that growth come from income. So again, that income coming from that rental income on a monthly basis, it's just going to start getting returned to those investors. Their thought is, acquiring new vacant homes in batches and leasing them out. As I said before in this, they're looking to assemble a stabilized community intended to get a better price because they're buying in bulk and therefore a better potential return than if they had finished just the finished product on all of these houses. The initial investment in Tortosa is an all-cash purchase of 5 buildings within the community, which is still under construction. Intent is to acquire and lease up additional batches of roughly 8 homes per month. Okay, so 8 homes, that's not bad. Eventually taking ownership of the 70 homes within the community. It's a phased buying structure, which I did mention before, which should result in much more efficient deployment of our investment capital. So like I said, that's just them being able to put that money to work right away for you. So they're buying, like they said, 5 right now, and then they're looking at doing 8 a month. So that money is just going to slowly build up for those returns. As they said, instead of holding cash for several months while waiting for that entire community just to be built and then acquiring it all at once, they're looking at getting that curve up a little faster than waiting that year. So our intent with this and other investments in single-family rental home communities is to be a long-term investor building a scaled portfolio that generates consistent rental income while at the same time being positioned to capture what we believe will be outsized price appreciation thanks to the confluence of demographic factors driving demand across the Sunbelt. So while properties, of course, look different than multifamily apartments, the underlying investment is pretty much the same. Like I said a little earlier, they're buying these houses. They have a little bit of space instead of apartments that are just bunched together. It's pretty much buying apartments, but on a much bigger scale. So they do have a leading property manager for the single family rental community across the U.S. So they have a property manager that's going to handle this. They handle the leases and things like that. They expect to purchase. The purchase price of all 70 homes in the completed community will be roughly $19.3 million total. While we acquired the homes in an all-cash transaction, they do intend to use portfolio-level financing with the aim of increasing expected returns and freeing up cash. So basically, what that means is they're gonna put financing into it and move the cash that we put into that, or they put into that rather, onto other properties. So eventually, it'll just be financing and things like that. So why did they invest? Again, growing local economy. 2020 census among all large cities in the country, Phoenix grew the fastest over the past decade with a growth rate of 11.2%. Population boom helped fuel rent growth on single-family rental homes in particular, as Phoenix saw rents for single-family rental increasing by 14% year over year in 2021. So that's kind of cool. We haven't actually seen anything in Arizona, I don't think, in the interval fund. So it's good to see something a little bit more on the west side of the country instead of the east side. A lot of it's been Georgia, Atlanta area, some stuff in Texas. So it's really good to see a little bit more west of things get in here and getting some more information on those communities. Again, social distancing friendly, like I said. Individual homes, they have a little bit more, square footage, especially in the yard. You're not just jammed in together in an apartment building. It just allows that a little bit more living space for the people moving in. And deal structured so as to allow us to acquire trenches of homes in regular batches. So they're looking at getting that 70, and they just see that as a really big factor in why they purchased this. So this project, again, part of the value add, single family rental, Maricopa, Arizona. It's part of the interval fund and the growth E-REIT 7. And so far they've put $1.34 million. And again, we're looking at putting in a total of $19.3 million by the end of this. So I did do a little bit of searching, and this is developments being developed by Ashton Woods, which I have seen some of this from another interval fund project. So it seems like they're teaming up with Ashton Woods a little bit here to fund the interval fund, as they say. New homes in Maricopa, near Phoenix. And you can kind of just see the pictures as they come through. We'll just go from the beginning, an outside view of one of their model homes, the inside of it. Doesn't look bad. Nice color theme and palette. Nice view of the sun. And it looks like a lake, and I'm not exactly sure what that is. Pools, maybe a community center. And there we go. Another picture of it. So Tortosa new homes in Maricopa. Looks like the plans are going from $334,000 to $428,000. I'm sure we're buying on that low end here from the interval fund. Experience true Southwestern living in Tortosa, the new master planned community in Maricopa, Arizona, with tons of designated community space and amenities, including walking and biking trails, parks, playgrounds. Your family will have ample space to enjoy the Arizona sunshine. Community location provides quick access to John Wayne Parkway, which makes for easy commuting to Chandler, Phoenix, and Mesa. Spend time at the nearby city park, which boasts 22 acres of soccer and football fields, covered playgrounds, a stocked fishing lake, that must be what those pictures are, and tennis courts. Make Maricopa your home today and discover the possibilities with Ashton Woods. So again, we're looking at Maricopa, single family, 3 to 5 bedrooms, 2 to 4 baths, 1 half bath. We're looking at about 1,500 square feet to 3,000 square feet homes and 1 to 2 stories, 2 to 3 car garages, and it looks like they have 11 floor plans. I'm not going to go through all the floor plans here. We're just going to kind of see the different styles here. They do have 11 floor plans and 21 quick move-ins currently. So they have Jasmine, the Iris, the Marigold, the Poppy. If you guys do want me to go in a little bit more detail on that, make sure to put a comment down below, and I'll go into these floor plans a little bit more, like make a part 2 video of this. Larkspur, that's an interesting name. Poppy. I do like the color themes on the outside. Sage, Sunflower, Dahlia, Snapdragon, and Daisy. That's cool. Look at it. So they kind of get bigger as we go down the list. Let's see, collections. Oh, this is just their different color selections. But here's the community map. So as we see here, it looks like these are the houses, and they're looking at future home sites here. And right up against them are houses that have already been built by others. So they have another company that was probably in there that was building it. I don't think I can, I can't zoom in anymore, but I can zoom out, and that's about it. So it looks like we're starting here on the, I'm guessing east side of it, and moving to the west side of it. Do have a model home at the end there, pretty far away from everything else. So that's a community map, and I don't think there's anything really, nothing really big on that. So I'm not going to go into the floor plans, but just to give you guys an idea, I did get a Google map of this, and this is from 2021, so it's pretty recent, sometime this year. This is the part that we would be looking at building in right here, and you can see this is where the other part of it was built. We're pretty adjacent to a middle school, which I'm surprised they didn't put that in the description, and it looks like an elementary school up north. So that's kind of cool. Looks like another part of the development, or another development, is going to be built in here. Looks like one entryway really into that part of the development, or on this side, but you'd have to kind of go all the way around. So I'm not kind of keen on that, but it is what it is. And we zoom out, and I thought I had looked through this and I had seen where the community center was. It's not there. Look at me, I'm just zooming in and out. I thought I saw a pond. There it is. So here's the community center. So here's that community center that we saw, that regional park, and then here is where the development is. So they got a little bit of a ride to get there, but it is close, I guess. And then this is what we saw from above, the Arizona seals swimming. So this looks like a nice little field area, that the fishing pond, and a multi-purpose field. So that's pretty cool. They have a nice little multi-purpose field area, and it looks like they have a hotel system coming up there as well. So what do you guys think of this? This new acquisition that we see from the Interval Fund. Do you guys like it? Do you have anything that you like or hate about it? If anybody is in the Maricopa, Arizona area and has seen any of these houses or is interested in this area, let me know why, and let me know if the price system there is comparable to what you guys have been looking for in that community area. Like I said before, if you liked what you see, make sure to hit that like button. And of course, if you liked what you saw, please hit that subscribe button and a little bell. Really does help. That like button really does help get the YouTube algorithm going. And if there's any questions, any comments, concerns, please make sure to put them in the comments below. Until next time, guys, take care.